Get the camera going here so you can see my ugly mug. Sorry, you got to put up with it anyway. And my screen sharing is on too, so I think we're good. So welcome. Happy Friday. Yes, thank you, Kevin. Appreciate that. It's been a crazy week for me, a little bit busy, but that's always a good thing, not a bad thing anyway. But yeah, so welcome to Trading Coach's Playbook. My name is Brandon Wendell, as the title says there, and I'm be your guide for the next hour, roughly, to take a look at the markets to talk a little bit about my experience as well. And I apologize ahead of time because there's a lot of noise in the background. I live in the Fort Lauderdale area, which we're supposed to get about 96-degree weather today, which would be fun. It doesn't usually get that hot because we're near the ocean. But anyway, the air show is going on. So we've got a bunch of F-22s and F-16s and all kinds of things flying overhead. There was just I don't know what it was. Sounded like a heavier transport. I don't think it was a C5. Maybe it wasn't a C-130. I don't know what it was. I'll have to look later. Anyway, I'm ex-military, Navy, but so I know aircraft identification, stuff like that. Used to live in California right next to Camp Pendleton too. So used to all that, but it is pretty noisy and it's not usually here. But anyway, that's aside the point, or besides the point. Good afternoon, Donald. Welcome, everyone. And well, to kick this off, just a quick reminder, we're not broker dealers or investment advisors. I gave that all up a long time ago. And we're going to look at the markets possibly today and looking at some securities and charts, but it's just from an educational standpoint, not telling you to buy, sell, or hold anything, giving any personalized recommendations about the markets because it's just education. I can't do that. We are also not subject to trading restrictions, so we can have positions in a security or initiate one at any time. And that being said, we do put on a lot of education. Sorry, my dog is trying to lick my legs here. And a lot of them are free. You can come every Monday to Power Hour with Rob. There's the Trading Coaches Playbook. We alternate who the instructors are every Friday with lots of great information there. I'll be doing a workshop next week on Tuesday evening, putting futures in your present. So if you're interested in learning more about futures and how they work, you should join me then. You get a little bit of that today because that's one of the primary things I teach. You've seen there's a class called the E-mini Think Tank. And we meet live 3 days a week, Mondays, Wednesdays, and Thursdays from 9 to 11 a.m. And we analyze and look at the markets. We also do a lot of education on the markets, and everything's recorded so you can go and play it back and watch it. It's kind of cool. So anyway, we're going to jump into, and by the way, got plenty of socials out there. We're pretty much hooked up on all those, so you can keep in touch with us as much as you'd like or as little as you'd like. And sorry, just taking a look to see who's out there. All right. Yeah, I run quite a few classes. As you'll see there, the E-mini Think Tank is the one that I do a lot of work in. Also, if you're not familiar with futures, the Futures Boot Camp is actually kind of a getting started in the futures markets, if you will. Gives you a lot of good information there as well. If you got any questions as we're going through this today, or even afterwards, what I would suggest you do is just email us at support@wealthbuildershq.com. I think it's typed, yeah, I typed in right. So basically my background, I got into the financial field originally as a retail broker on the buy side. And I kind of hated it because it was just a sales job. And literally I was at a penny pusher. So it's funny, people watched Boiler Room and Wolf of Wall Street as entertainment. For me, it was a flashback. We didn't have the Quaaludes. It was a little more tame where I was in San Diego, but we had to dial. They said smile and dial. So we had to do 300 dials a day minimum. It was crazy. We had a checklist. We had to check it off. And they had a mirror in front of you too to smile and dial to make sure you were actually watching and smiling, being jovial when you're making all these calls all day long, trying to push some crappy stock that nobody ever needs. Anyway, I digress. I ended up moving to back office operations at a more legitimate brokerage. And my first brokerage is no more, actually. It went under eventually. I don't know if they got investigated, whatever, but I ended up becoming what they call an agency desk operator. And what I was doing there was fulfilling orders both for the brokerage and customers and taking care of getting those orders, like I said, completed. So we'll talk a little bit more about what I did. It was a great experience, to be honest with you, because it allowed me to kind of see what we're going to talk a little bit about today, order flow and price action. Sorry, so do something here real quick. There we go. And yeah, so I ended up doing that for a little bit. Then I parlayed it into working for a hedge fund for a while. So as a trader for a hedge fund, moving large shares of stock as well as bonds and futures. for the fund. It was a private fund in La Jolla, California, which is San Diego area. And then in order to start working for the hedge fund, I had to get educated on trading a little bit more because I was dealing with order flow, not retail trading. And after I decided to leave the hedge fund and trade for myself, I had some struggles. I mean, it's much easier when you're trading other people's money. It's much more difficult when it's your own. The stress is there. So I ended up going back to where I was educated, and eventually I started teaching as well. I always joke, I say I'm genetically engineered to be a teacher in trading because my mother is a retired stockbroker. I'm sorry, other way around. My mother's a retired teacher. My father's a retired stockbroker. So you obviously blend those genes together. But we're going to talk about order flow and what we can do when it comes to pretty much any market. It doesn't matter if you're trading futures, stocks, Forex, options on Forex, options on futures. Yes, there is options on Forex, just not in the US. It's relatively limited anyway, but it is available. And yeah, like I said, we'll talk about a lot of these different things and how you can analyze the markets. So with order flow, it's really what it comes down to. With my perspective, when I was working for Lloyd Wade Securities, they're still around. They're a brokerage. I think they're based out of Texas, Austin. I was working at California branch. But basically, brokers back then would talk to customers. They actually picked up on a phone. I'm sure most of you know that, unless you have, was it Gen Alpha kids? They probably have no idea how to use the wall phones and actually dial. But anyway, the brokers would talk to customers. They would get an order to buy or sell. And we actually had some retail, we had institutional orders coming through as well as the retail. So it was kind of both sides there that we were dealing with, the general public and some of the institutional players. So they would get that order, they'd write it down on a piece of paper called a chit. And these aren't the exact ones that I had, but they're very similar. And they would write down the order, account numbers, what prices they wanted, what securities, all that good stuff. And it was my job to take that and get those orders filled at the trading desk. And it's all electronic now. It still happens in a way because you have, if you push your button on your computer to buy, it still has to go through your broker, and the trading desk is now automated. However, there are still live people at most online brokerages to help you out if you need an order filled. So the nice thing is that, you definitely don't want traders messing with your orders because, they can get orders filled for the brokerage at a much more advantageous price, but turn it over to you at whatever price you ask for, which may not be the same. So they try to get a profit, like I said, for the broker at your expense. If you can do it yourself or with no trading desk, you have a higher probability of getting the best possible price that was available. Sorry, I was checking a message that came in. So anyway, like I said, basically, I don't know if you remember the old CRT monitors, monochrome like that, but that's what I had. And I was dealing with the orders coming in, and I had to get them filled. And I was dealing with what they call market makers. And they're still around. The market makers are still there. It's just mostly electronic. Everything is kind of done almost automated at this point. But it still is the same with order flow. Believe it or not, the charts haven't really changed all that much, even with dark pools and quant trading and I'm trying to think what the word was. Anyway, all that new stuff that's coming in, the charts are still relatively similar to what they were looking like before. And there's still opportunities out there for traders like us to either automate ourselves the way we trade and rely on the patterns that we still see, or manually do it. I still like pushing the buttons for my buy and sells, even intraday. Jennifer saying I had a compact portable computer. You remember the DOS code too? Yeah, I remember it. MS-DOS, Microsoft DOS, and I think I had a Tandy 1000 was my very first desktop computer, if you remember those. The Radio Shack. Yeah. Anyway, I think they call them Trash 1000s. That was the nickname. Anyway, so again, what had happened was I would get those orders, I would get them filled on the computer through the market maker activity, and then tell the broker what kind of fill they got, and they would turn it over to the customer. So order flow still kind of works this way, no matter what. Honestly, when you look at a chart, for instance, here, where am I? Don't tell me I closed it. Oh, there it is. Okay. It's on the wrong page. We look at a chart, and what are we really seeing on this chart? we are seeing filled orders. That's it. We're seeing orders that have been completed and what price they have been completed at. That's all it is. If you look at market depth, you see possibly some pending orders, but how much truth is there really in those pending orders you're seeing? You got to be careful because what you're seeing may not be the reality of what's going on in the markets. What you see here in the chart absolutely is. I mean, that is a buyer and a seller that have come together and made a consensus. They want to exchange a security at a certain price. And whenever, excuse me, it's exchanged, that's the price you see on the chart. So that's truth. But what goes on before that happens is order flow. I mentioned that I would get the blue buy orders, the chits, and the pink sell order chits, and I would have to deal with those and get them filled. Well, it also happened. I had friends who worked on the different exchanges, either in Chicago, New York, Philadelphia, all over the place. And they had these, there's different jobs on the floors of the exchanges. You had clerks that were dealing with orders coming in from their brokerage. You had specialists on the floor that were creating a book and matching up orders from people either in the pit screaming at them or electronically. And then you had the brokers and other traders that were on the floors as well, or going in through computers and phone orders, believe it or not, back then. Now, like I said, everything's pretty much electronic. Eventually, they'll turn the New York Stock Exchange into a Starbucks, I imagine. It's much more empty than what it used to be. I mean, the Chicago pits for futures, I think they only have a few pits open, if even anymore. So you had an opportunity to play after hours on the SIBO pit. That's awesome. I had never actually gone to a pit. I was supposed to go to the Minneapolis Grain Exchange, and 2 days before I was scheduled to go, they closed it. So I was like, I'm not going to go to an empty pit. That's stupid. But yeah, after hours, probably saw the tickets all over the floor, all the garbage. Anyway, actually, let's see. Do I still have? No, I don't have the picture available. Oh, wait. Let's see if I can change my background if it lets me. I'd have to, never mind, it would take me too much work on this one. Unless it does it automatically, we'll see. Nope. Anyway, so this is what would happen, like I said, at the pits. Basically, you would stack up your orders, so the clerks would do that, and they would have stacks of sell orders, stacks of buy orders at various prices. And it's pretty obvious. You could see where the majority of orders are kind of on the wings, if you will. Buyers want to buy at lower prices. Sellers want to sell at higher prices. It makes sense. So let's say you came in with an order for 30 bucks. Right now, for you to get filled, for you to buy at $30, whatever the security happens to be, you need someone to sell to you. There's nobody there right now. So since there's no one there, we would have to create an order, basically write up a chit and send it to the market. So there's a buy order at 30 bucks. Now, if you're lucky and somebody's willing to sell to you, great. Take your order off the board and it gets shown on the chart that there was a transaction at $30. Done. Well, what if there's nobody willing to sell to you at 30 bucks? All those people are standing fast at 31, knowing it's likely to go up in price. Well, if you decide you really need this security, you're probably going to cancel your order, suck it up, and pay 31. So you move up and you end up taking out wherever that seller was at $31. Well, you'll notice there's less selling pressure now at 31. We went from 3 sellers down to 2, okay? And it could vary how much, how many shares they're looking at, whatever, it doesn't matter. But what if there's also, you're not the only person trading, right? There's a lot of people trading right now. Oh, hang on. Yeah, apologies there. So yeah, you're not the only person trading. So what if there's a lot of buyers wanting this security right now, and they're all rushing in to buy 31? Well, maybe they take out all that demand. I'm sorry, that demand takes out all the supply at $31. Well, now if anybody wants to buy, if they try to buy at 31, we'll put another blue chit out there for them and wait, or they have to go up to 32 and buy from them. If they wipe out all the 32s, it goes to 33. And what you'll notice, I said it before, the higher we go, typically, the more people are willing to sell. Either they want to sell at that high price at the beginning, or they ended up, maybe even some of those people who bought at 31 are willing to sell at 34. So that stack might even grow. But the higher prices you get to, typically the more selling pressure you'll start to build. And you'll start to lose buying pressure, right? Because who wants to buy at the top? Who wants to buy expensive things? No one. We want to buy cheap, right? Not expensive. So once we get to an area where there's this huge imbalance, basically we have a lot of sellers, that big stack, but nobody's willing to buy. Well, a lot of times what will happen, and it's not guaranteed, of course, but a lot of times what will happen is that some of these sellers will get nervous. They've been watching this security going up and up and up, and it's not going up anymore. And they weren't able to sell. Well, they better sell before it goes down, right? Well, if nobody's willing to buy from you at 34, you're going to have to drop your price to attract buyers. And since, somebody jumped in front of the line there and went down to 33, maybe more people start joining them. Again, they're trying to attract buyers. There's an imbalance that caused prices to turn. This is why prices turn, even trends. They were going one direction, they turn due to an imbalance. We didn't necessarily have more sellers coming in. We had an imbalance where we had a lack of buying pressure. Without those buyers matching those orders, we can't go up anymore. And, well, the sellers get aggressive. Like I said, they may keep stepping in front of each other and drive the prices down. And the same thing would happen if prices keep going down, down, down to that big stack of demand. Eventually, we would run out of sellers because nobody wants to sell at a really low price. So once we get that imbalance on the downside, we probably rally. So obviously, we can't see those stacks of orders. I mean, they don't exist. It's all electronic anyway. And it's not what is being shown on market depth if you're trading with the stocks or even on futures if you're looking at market depth. The institutions, it's kind of like poker. If you have a good hand, you don't want to have a tell and let everybody know you have a good hand because they'll fold and you won't win any money. In order to try to take money from some of these other players, if you have a really solid hand, you have what's called the nuts, meaning, you're probably not going to get beaten. It's a really great hand. You got to slow play. You got to lure those people in to be able to get them to put in more money. Same thing with the markets. If somebody wants a stock or a future or a currency to go up, they have to lure buyers to keep coming in and pushing that price higher. If there's nobody willing to buy, price will go down. I just showed you why. So right here, we have a big stack of buy orders, and that's called demand. There's a lot of people wanting to buy, and if there are no sellers on the other side, prices will shoot to the upside. Now, some of those orders did get filled because there are candles there printing. So there were some trades completed, but not a whole lot because of that big imbalance. The number of buyers in general, or even the number of shares or contracts they wanted was much greater than the selling pressure. So they were pushing prices up. The buyers were pushing prices up to attract sellers to complete their orders. As we keep going up, you'll notice we may run into a wall of selling. And if there are no buyers up there, we'll see what happens. But think about this. If there were no sellers down here, why? Well, one, it may be a very strong security that is likely to keep going up. You might be in a strong uptrend. You might have a lot of institutional buying at that area. So unless something fundamentally changes in that security or the overall markets, or whatever it follows, there's probably not going to be sellers there in the future. Think about it. If you sold at that low price, and I'm sure none of you have ever done this, right? It's just me. You sell at a low price and you just see it go up. And you're like, oh, why did I sell there? Oh, would you sell there again? Probably not, right? It's like that once bitten, twice shy, or, pain and pleasure. As humans, we try to avoid pain. It's just our nature. We try to reenact or re-experience pleasurable experiences. But painful experiences, unless you're a masochist, you try to avoid those. So we're not likely to see those sellers come back in unless, of course, something's changed. Like I said, the trend, whatever it may be. So if there's not really a lot of sellers in that area and there was a big imbalance, the probability is high that there's likely to be a lot of buying pressure there again and very few or no sellers. So we have a chance of possibly buying in that area, but We don't know 100%, do we? There's no way of knowing 100% that prices will bounce there or that the sellers won't come in. So we always need to protect our money and place a stop loss. Yeah, you don't have to be right all the time. You just don't want to be wrong big. Let's put it that way. So as I said, the prices rallied up here a little bit and then ran into that wall of worry. Lots of selling pressure here. If we run out of buyers, prices will likely drop back down to where that stack of buying pressure was. And once again, we didn't have a lot of selling pressure here before. The imbalance is back. Some of the buying pressure did get taken away, right? You can see this was a bigger stack. As we came down, we wiped away some of that buying pressure, but it's still in an imbalance. There's still a lot of buying orders, but once again, we don't have a lot of sellers. By the way, you'll notice I was looking to buy near the top of that range. I want to get in front of all those buyers because I need to get in before there are no sellers left. Okay, it's all done based on price. First come, first serve, best price wins. So if I'm able to buy there and there are no sellers, I was right. Prices should continue to go back up until we reach an area of supply, the opposite imbalance where there's too much selling pressure. That's literally what happens all the time in the markets. Again, if I go back to the charts, well, you can see we're stalling right now at an area where there was an imbalance earlier. I tweeted a little bit this morning with some levels, and I do use one indicator. This happens to be the RSI. I don't know why it doesn't show the information there, but it's the RSI. The only thing I change is the overbought, oversold numbers. And it's a default, I think, 14 periods. Let me check. Yeah, that's it. 14 periods RSI, but you got to be careful. Technical indicators, for the most part, are based on past prices. Okay, that's I say this a lot. You know, it's like driving, looking only in your rearview mirror. It's crazy. You don't know what's coming up. So I don't use this indicator the way most people do as an oscillator. You know, I'm a what they call a charter market technician, or CMT. Basically, I got kind of like a master's degree in technical analysis. I had to learn all these different indicators, what they're based on, how they work, all that good stuff. And I kind of changed the way I look at the RSI. An oscillator tells you when the price is overbought or oversold. Well, here's the problem. A lot of people think that overbought means you're going to come back down. Not necessarily. In a strong bullish market, overbought can become more overbought. In a bearish market, oversold becomes more oversold. That's just the nature of price. But momentum, that can give you a little bit of a clue. And that's actually how I use the RSI. As a matter of fact, you know, I was mentioning, and I'll show you more of this later, but going into, this is the E-mini think tank. If you become a member of that, it's up to you if you want to. But right here under bonus material, I have education on that. You know, finding zones, kind of what I'm talking about today, and their RSI, how I actually use it. And not only do I have videos that you can kind of learn on demand whenever you want, but I also have documentation that supports all that and kind of helps you. And I just updated it. I'm redoing all the education right now in the live classes, which is kind of cool. But anyway, getting back to the charts, it doesn't matter what time frame you're looking at or even what security. Let me see. I'll go to crude oil. Oh, wow, that dropped. But you can see where it dropped from initially today. Or was that? That was Friday. What time frame on? 15 minutes? Yeah, that's today. And it dropped from an area where prices had turned previously. Why? Probably a lack of buying pressure and the origin of lots of sellers. Came back up actually twice, but the momentum was worse and prices collapsed. We can go out to daily charts. We'll see the exact same experience. Going back, there are certain areas that you can identify, and I'll show you a little bit more about how I do that in just a moment. But these areas, notice the origins of large patches of green. That green candle means buying pressure. And if it's a fast move or larger size candles like that, not the biggest ones here, but not bad, that means that there were no sellers in this area. And crude oil, for instance, had to go from a price of about 77.25 up to 78.75, almost 79 bucks to find sellers. There's no sellers in this area. There weren't really a whole lot here. And what happened? we bounced. Eventually, it went through all the orders that were there, and we went to the next level and bounced. But if you can identify where that imbalance originates, it's called supply and demand. That tells you where you need to buy and where you need to sell. So does supply mean that the stock is going down? Not necessarily. Supply means if it's a zone, it means that's an area where there is an origin of imbalance. There is a large number of selling orders in that area and a lack of buying pressure. Maybe no buyers really, or very few. Now, in an uptrend, and this is a key thing, I also have to identify the trends to know that demand or supply, is that an entry or an exit point? Because if we're in an uptrend, that supply is likely to break. So I may only look to exit and take profits from my buy, my longs. I probably won't want to enter shorts, and vice versa. If we're in a downtrend, which right now, crude oil on the daily, and let's see if it's on the weekly, not yet on the weekly, but on the daily, we're in a bit of a downtrend, which means if I come to supply on a smaller time frame, say a 4-hour chart, notice the large candle here. If we get to that area where there's that large red candle, there's a lot of selling pressure there. We are in a bigger time frame downtrend. I would definitely look more at selling there rather than just exiting longs. I probably won't even be looking to go long. And on the opposite side, if this is an area of demand, there was a lot of buying pressure and very few sellers. The problem is the overall trend from the higher time frame is down. This is likely to break because people who recognize the trend may even cancel those orders that are left over. That's what I'm really looking for. I'm looking for that origin of imbalance and where there may be leftover orders. I think I have it coming up. Yeah, actually on the next slide here. So when, it doesn't really show too well. I should have gone piece by piece. But when I look for these zones, and it's just patterns, that's all it is, patterns on a chart. If you identify the patterns on the chart where there's likely to have been a big institutional order, there's a high probability there's leftover orders. Let me explain that using a live chart again. And I'll go to the NASDAQ. Yep, got to clean my charts. Obviously, I was working with this one before. So just go back to a random time, doesn't matter. It's actually last week. That's fine. I'm on a 4-hour time. Actually, let's go down to 60-minute. There we go. Yeah, I'm still there last week. So when it comes to the correlation between uptrend, supply and demand, well, again, it's all kind of together. The way I teach and the way I trade, right here, trading routine and finding zones, that's where that lesson is and that information. But also, I think there's something I did on trending. Yeah, trends as well. I do what's called multiple time frame analysis. So to kind of put it simply, if we're in an uptrend, actually, one step before that, I'm getting ahead of myself there. Multiple time frame analysis. What that means is I'm going to view any security I'm willing to trade on multiple time frames. So I have on my biggest time frame, actually, I'll start off with the lower one first. I have a zone time frame. Okay, and I call it ZTF, zone time frame. That's where I'll find the zones. Okay. Oh, you watched the post on X? Yeah. I mean, I kind of show a lot of that there. I also have some videos on YouTube as well. So this is where I find the zones. On the next step up, the trend time frame, or TTF, I identify the trend. And basically, the trend tells me which direction to trade. Okay, it literally tells me, should I be going long, should I be going short? And there's a relationship between those two. Okay, you don't just take like a 5-minute intraday chart and then go to a daily chart for the trend. There's other trends that will affect you. I'm not going to go into that right now, but again, there's information that I teach in my courses that have all that there. But trends don't go on forever. So where are the trends likely to end? they're likely to end at the prospective time frame. Oops. Or the PTF. And the zones here cause the trends to pause or end, or I should say reverse, because that's really what happens. They start going in the opposite direction. So I take that all into account. I look to see, okay, what trend are we in? Because I find some great zones. For instance, if I look at this area, and I'll get back to this note in a moment. If I happen to have noticed this area of demand and pull this back a little, there we go. Before we get there, I'll put it here. There we go. If I notice that there's an area of demand, but we're in a downtrend and we're not near the bottom of the trend, we still have a lot of room to go, then I probably should not buy there, period. I would be better served looking for an area to sell. If it were in an uptrend, basically the shorthand, I guess, or short answer is in an uptrend, and I should say a trend time frame uptrend, you buy demand from the zone time frame and exit at supply from the zone time frame. Period. You really have no business going short unless you do trade, and there's some counter trend trades that work. It's greater risk, but anytime you increase your risk, you get more reward. Doesn't matter what you're trading. That's the way it goes. If you try to reduce the risk, you will reduce your reward, period. So if you're wanting to do counter trend trading, fine. It can work very, very well. There's nothing wrong with it. But typically, most traders should be looking to go in the direction of the dominant trend. You'll make typically more profit per trade going with that way. And you have to make fewer trades, which means fewer commissions, less cost, and it's safer. But if we see that we are in a trend time frame downtrend, basically I will sell supply from the zone time frame and exit at demand from the zone time frame as well. That's it. So the trend tells me which way to go and how I'm using those zones. However, when the trend actually gets to the prospective time frame zones, either supply or demand, that's when I know, okay, I might need to kind of take a look at this and see if we're changing trend, and I may need to reverse my direction. If the trend doesn't reverse, great. But if it does, obviously, I got to go with it. So that's kind of the answer. So does supply mean the stock's going down? Not necessarily. If it's in a downtrend, possibly, most likely. But if the stock is in an uptrend and the market's in an uptrend, it's likely just to be a pause at supply before it continues upwards. So hopefully that answers the question you had a little bit better. Yep. Let's see here. It's getting so many. Sorry, my phone just keeps blowing up here. Anyway, continuing on here, if I don't have the trend on this time frame right now, the 1 hour is my trading time frame or zone. But if the 4 hour trend was down, it looks like we started forming a little bit of supply here, possibly. You can see it came into that area and broke right through. So notice the RSI was going very low as well. That helps out. As we're approaching that area, I apologize for the arrow there, but you can see there's lots of bearish momentum. There's enough bearish momentum that we should punch through that demand. So that's also kind of a warning or a filter that I use to help me in identifying whether or not I should be taking positions. And it punched through. And then I think it was May 1st around 2 o'clock coming up here somewhere. Yep, there it is. Can't miss it. It was the biggest move. And by the way, I think we also, this one was gone, so I might as well move it anyway. I think we came down kind of into this area. Just missed it, unless you use the wick, I guess. But you see, this was where prices stopped declining and started to rally with a bunch of green candles. Well, that's an imbalance, isn't it? So somewhere in this area is where those buyers found that there were very few or no sellers available. And if there were no sellers there, probably not going to be a lot of them here either. As a matter of fact, there's also something else that's going on here. Let me fix this real quick. When prices were moving down, this is actually a better way of using indicators rather than overbought, oversold. As I said, I'm kind of using it to see momentum. The jet. I don't know if that's going through the mic or not. Oh, that was an F-22. That's cool. Anyway, so you can see that prices were going down. As they were going down, they were doing it with less momentum. That's called positive divergence. And it did it again right as we were approaching that little demand zone. So even in a downtrend, if you don't have the momentum to get through the zone, you'll probably get a bounce. And sure enough, the Fed, I almost forgot, there's also an area right here where prices went sideways and then dropped as well. But when the Fed made their announcement, you could see exploded upwards, stalled out just above this area, but this is where there was a lot of selling pressure and came right back down. So why did it come back down? The overall trend at this point was probably bearish. Again, you'd have to go to the bigger time frame to verify that as well. But that's what it comes down to, is just simply looking to see what the trend is, where's the trend going to end, and where are the imbalances for you to be able to enter or exit. I was using that on futures, the NASDAQ. You could do it on stock. And it could be any time frame. If I go out on Tesla to a daily chart, I look back, where are we at here? 2023, great. And I look for the origins of imbalance. It's just a matter of finding those patterns that tell you where and this was a big imbalance. There was earnings that came out, probably bad revenue, maybe. Yeah, it's probably bad forward looking. They usually do a call after that, and they usually tell you what's likely to happen, because you can see it changed direction so much because there were no buyers in this area. They had to gap the price down. That's the biggest imbalance, gaps, because there was absolutely no buying pressure in that area. To get any fills, they had to push the price way down. Anyway, moving forward here, again, not always looking just for the turning points, but those can also help. But I'm looking for that imbalance. This is not a great zone, but we'll see. Yep, I said it's not a great zone. And sure enough, again, earnings, you see it's red, so it's bad earnings. Gap down, no buying pressure there, paused for one day, but there's enough selling pressure that we punch through. But that's how it works. Oh, this is a decent supply zone. Let's see how that handled. We've got an area where prices paused, and there's also a zone right above it, because that's where we changed direction. That's the origin of the move down. But you see that large red candle, right? And the gap. There's a big imbalance where there's not a lot of buyers there, lots of sellers, obviously. So as prices come back up, couldn't even get there and stalled out. That's how strong that selling pressure was. But look at that. It pushed back down. Now, will it continue to hold? Probably not. This is where supply and demand is different than support and resistance. When you take a look at the support and resistance definitions, or you've watched people talk about it, they'll keep telling you the more times you hit a support or resistance level, the stronger it becomes. Bull. Okay? It doesn't work. That's like saying every time the waves hit the beach, it makes the beach stronger. It erodes, it takes away sand. Every time we hit a zone, it's taking away leftover orders that we need to cause that reversal. Actually, I just realized this is not a good zone, because kind of paused and dropped there. That was a reaction to it. So that's not even likely to hold the next time. And this one is getting eaten up. And look at that. We punched through it. Why? It worked close to it there, removed some orders, removed more orders, wiped out all the orders, and actually went to the upper area. And this is a negative divergence, kind of the opposite of the one I talked about earlier, the positive, where prices moved up without momentum and then dropped. And that actually worked better than I thought it would. I didn't think that would work well. I was wrong. But I mean, that's kind of what stalled the market this morning too. I don't know, again, if you saw my tweets, but if you're looking at ESM 2024 this morning on a 60-minute time frame, 7th, good, we're almost there, 8th. And I just don't want to go too far yet. 6 a.m. So right here is the open should be. It's 8 a.m. So we're right about 9 o'clock. And one of the things I said when I was putting out my tweets is, yeah, we're still pretty bullish, but if we end up showing weakness in momentum, we're probably going to turn to the downside today. And sure enough, we opened up with lots of momentum, pushed up, and then try to push higher. Where is it? Right here. Is this today? Yeah. No, I'm sorry. That was early morning. That's not yet. I was at the wrong time there. Wrong 9 a.m. There it is. That was this morning. So right here, we started off 9 a.m. opening bell 9:30 and started moving up. That's what I was showing this morning on Twitter or X. Sorry, it's not Twitter anymore. But right there, once again, lack of momentum. So it's not just the zones, but the zones do identify where turns are likely to happen. But lack of momentum and trends have a big impact. So we lost momentum. We tried to go higher without that momentum. You can't do it. Yeah, the platform formerly known as Twitter. That's what everybody is saying nowadays, isn't it? I just think of Prince every time I hear that, the purple one. Anyway, that preceded the drop. But we're not going lower. Why? Well, that's a 15-minute zone, I think. But there's also right here, again, the origin of buying pressure after the pause. So we're getting close to where all that imbalance, lack of sellers and lots of buyers were. So continuing on with the information, supply and demand zones are areas that are objective. I have rules that I've placed to identify where supply and demand likely are. Actually, let me do this real quick. Open that up because I forgot to open it this morning. And I'll show you how it's objective because I actually had somebody code for me where to find these supply and demand zones based on the rules that I set forth and share with my students. And the computer can spit out and actually color code where those areas are based on that parameter. And there we go. They're changing everything this weekend here. This is Thinkorswim, if you're not familiar, is going over to Schwab. So anyway, we need objective areas, and that's what supply and demand gives us. And the nice thing about the technical analysis is that it's fractal when it comes to charts. Fractal means the pieces are the same shape as the whole. So whatever works on a 5-minute, 15-minute chart will also apply to daily and weekly. It works the same. So whenever you learn your technical analysis, you can apply it anywhere. I showed you 3 different time frames that I'm analyzing. Those could be whatever you want. You could start off with a zone on a 1-minute chart, or you could be analyzing on a 1-day chart. There's even different styles of charting. We were talking about that actually on Thursday, and we're continuing our discussion on Monday. Yeah, so right there, actually, that's part of the education I was doing right there. Finding zones, trend time frame, direction, where the trends will end. And with this was wheat and a trade opportunity we identified. And you notice before the trade happened, right here, the program identified the basing area, the beginning of the demand for me. How to do that? Well, there's simple rules to help identify what is a demand, what is a supply. And that is really crucial because if you're not consistent, you can't make money. You got to be consistent to be profitable. Okay, you don't always have to win, but if you're doing the same thing over and over again, you should get the similar results. If the results are not what you want, you can actually fix that plan and tweak it until you get the right results. But if you're not doing the same thing over and over again, you have no idea what you need to fix, right? So if we have rules that show us the structure, how to find a zone, and we can program it in. I share this with my students, the code on Thinkorswim. I think I have it on TradeStation as well and a couple others. But like I said, I share it with my students in the classes. But there we identified an opportunity. I vary by time frame. I don't just use 1 hour, 4 hour. No. As a matter of fact, let me see if I can open it. It's over here. Where's my other? There it is. Sorry, my cursor keeps disappearing on me. File, open. Let's see, Friday's trade ideas. I think it was this. What happens is my emailing think tank, I identify opportunities and then I send out those opportunities to my students prior to the class starting, and it's emailed out to everyone. We also obviously go over them in class. We actually canceled the heating oil trade because the trend had changed. So I was using a 15-minute chart to trade that and then a 60-minute on this wheat. And you can see that's the position we were looking at. Getting in, stop loss. We already identified what our risk was going to be, target 1, target 2. So we had all that information. There it is. And there we go. And I think did it hit target 1? It was, yeah, 655.50. So we went to target 1 right there and now on our way to target 2. But it pulled back. I think I got stopped out along the way. But the thing is that this is a structured way of looking at the markets and identifying opportunities. And we want to basically copy and find what those big institutional traders are doing and simply follow their orders. It's like anything. If you want to be successful at something, you find someone who's very successful at what it is you're trying to do and learn from them and copy them, mimic them. And that's what I try to do with my students, work with them to be able to copy those institutional orders and trade right along with them. So we want to be more consistent right there. And it starts off with identifying what's going on in price. There's something as simple when it comes to the structure of the zones. There's basing candles and there's lead candles. Now, this is not necessarily the zone finding itself. This is the pieces that go into making a zone. When a candle's basing, it basically shows that we're not going anywhere. There was not enough of an imbalance to cause prices to push upwards or downwards. So there's a lack of momentum altogether. Sorry. With the leg candle, we actually do have a bit of imbalance because we're legging in a particular direction. Okay, so we actually have some commitment to the bulls are pushing it up and there is not a lot of selling pressure opposing them, or there's lots of sellers with supply flooding the market and no one wanting to buy. We have an imbalance. So to identify those candles is very simple. Again, rule-based. A basing candle is nothing more than the current candle closing within the range between the high and low of the previous candle. That's it, period. Very easy. There's no questions about it. It's if you close, and it could be a 5-minute chart, daily chart, doesn't matter. So as an example, again, the range of the candle includes the highs and lows themselves. So it's kind of like baseball. Tie goes the runner. If you close at the high or close at the low of the previous candle, it's still basing. That means that that current candle you're looking at is a basing candle. The wicks, by the way, don't matter as much. It's the closing price we're mostly concerned about because, let's face it, we don't care who's in the lead at halftime. We want to know who won the match. So did the Bulls or the Bears win? So right here's a couple of examples. Starting off, red candles close at the bottom of the real body. And you can see it's obviously within the range of that green candle. That red candle alone is a basing candle. Not both, just that one. If you close within the wicks, not the body, still, that's the range, high and low. Here, we went above the range, but didn't close there. Since we closed inside the range, again, basing candle. If it's green, we close at the top of the body. The same rules apply. Closing inside the range, closing inside the range. Again, wicks protruding, doesn't matter. Closing at the high, closing at the low, that's still a basing candle. Period. Now, that doesn't necessarily mean it's a base for a zone. It's just simply a basing candle where there's a lack of commitment or pressure to push out in a certain direction. The opposite, if you close outside of the range, would obviously be the leg candle. That's all. So if the current candle closes outside, either above the prior candle's high or below the prior candle's low, that's a leg. We were able to fight it out, but by the end of that period, either the Bulls won or the Bears won. Okay. By the way, the wicks don't matter as much. Now, they do matter when it comes to overall reading charts. The way I look at charts, go here again. When I'm looking at charts, and I teach this in chart reading, there are 4 things I typically look at: color, shape, size. Sorry, size matters. Anyway, and 4, location. Well, location is kind of what we're discussing now. That's supply and demand. Okay. The color, obviously, is whether a candle is red, which is, let's see, we'll do it this way, selling pressure, or green, buying pressure. Shape, those are the wicks, or you call them sometimes tails. They clue you in whether you have buying or selling pressure. Simple thing right there. Did she say that? I don't know, not to me. She wouldn't hurt my feelings. Anyway, you can see that there's bottom wicks right now. Well, those bottom wicks mean that we could not close at the low. So there's obviously some buying pressure that held that price up. And it's not a big surprise. This was an area of demand where there's buying pressure. So with size, you have what are called expanded. Expanded or extended range candles. And you also have what are called narrow range candles. And they mean different things depending on where they are. So location is supply and demand, but also location of those types of candles as well. Okay. So there's a lot of little things into reading price that can actually make you better. One of the ways nobody really taught me this, I don't think. What I did was I started going back on charts just to random periods. Hit the wrong button there, sorry. One of my spreadsheets. And what I was looking for was where prices changed direction. For instance, here, prices were moving down and then they started going up. Okay, so I'll enlarge this area and I'm focusing right here, mostly. Why did prices turn around? Was there some sort of a signal there or something based on the candles that told me that? Well, yeah, there was actually. One of them was, I'll do this one. This candle is very large. Well, usually when you get a large candle after a move in the trend, those are the latecomers. Those are the novices chasing price. And honestly, most of the time when you see that, you'll get a spike in volume too. Yeah, it wasn't the biggest spike because it was at 9 o'clock at night, but notice from 6, 7, 8, 9 p.m. and then afterwards, that's the biggest candle. Now, obviously, regular trading hours, you get much more volume, but there's a spike in volume for the latecomers. And then shape. What did I just say those bottom tails represent? Buying pressure. So there is actually 2 clues right here in price saying we're probably getting close to a pausing point or a reversal. How would I know the difference? Well, actually, I would look at the prospective time frame or the next larger time frame and see, is there a demand zone here that's telling us we're going to turn around? If not, it's a pause. If there's demand, we're probably going to turn around. So that was, let me see. Oops, wrong button. Right there. So I'm going to go to the 240 and find that line where it was. Where did I have that? There it is. And looking back at the bigger time frame, that was a 1 hour chart. This is a 4 hour. What do we see here? Demand area, lots of buying pressure, right? They actually turned, technically, this one might have been part of it as well because it's inside of this, but that's why prices turned there, because we were approaching or hitting a demand area and it gave us clues: color, shape, size, location. Pretty cool, huh? just knowing how to read price. But I kind of went back through charts. This is way back in 1999 to 2001. I was doing this, just identifying what's causing this price to reverse and change. Were there any clues in candles in price? And that's what I was finding. So the leg candles, again, if you were closing outside of the range, it's a leg. So here you can see we opened but closed below the low. That's a leg candle. Even if you go above the previous candle, it doesn't matter. It's all about the close, final price. Green candle closes above the previous. So if I go back, I'll go back to that NASDAQ. Actually, no. Let's go. Sorry, I was helping some people with some analysis on Indian stocks earlier. Here I am on a 4-hour chart of the euro dollar. Again, it works on any security, doesn't matter. What I could do to kind of figure out, are we basing or are we legging, is just simply take a line at the prior candle's high and low and see where do we close. Well, there's a red candle closing inside the range. That's a base. Next candle. There's the low. There's the high. That's also a base. Go to the next. That green candle closed at the top of the body. That's above the high. That's a leg. Again, just keep going. That's a base. So that gives you an idea of what's going on. We're getting a lot of basing going on here. Obviously, prices were going sideways. If you get a lot of leg candles, you're probably somewhat in a trend. And there's more to it, but this is kind of breaking it down simple. And what happens is I use that definition of leg and base candles to identify zones. And there's only 4 patterns. Now, there's a lot of things that make them stronger or weaker. You got to take that into account, as well as trend, right? But there's only supply and demand, and there's only 4 patterns. You are either going to find demand at what we call a drop base rally. And keep in mind, just because it says base, that doesn't mean it's only basing candles. There could be leg candles in a basing for a zone, okay? And we have rally base rally. Well, the drop base rally is a reversal point, while the rally base rally is a pause as we were continuing to go in a direction. You know, an uptrend is usually higher lows and higher highs. So when you pull back in the trend, you usually hit those rally base rallies before you go up. And of course, the opposite, somebody's horn is stuck on. Hopefully you're not hearing all that extra noise. But here for the supply, we have rally, base, drop. And again, the base can be comprised of either leg or base candles. It just depends on if they fit into the structure that I put out. And that's a reversal. And then we have the drop base drop, which you'll see a lot in strong trends because you're making lower highs and lower lows in price. So during corrections, when we pull back, these will be the areas you either enter or exit, depending on what trend you're in. That's what it comes down to. And that's pretty much what I use when it comes to trading. Sorry, I was looking at something else here. And well, I didn't draw any zones here yet, did I? I just drew the lines for leg and base. But the way I start or look for zones, let's say we're looking for demand. I will start off at current price, and I'll look left and down for the imbalances. And again, I've got definitions and structure for how I actually find those zones. They have to fit into that structure or they're not a qualified zone. So by looking back, see, I got the snap mode on. Got a big green candle right here. So that's probably an imbalance, but I have a leg and a leg. That's not a zone. Could price turn there? Maybe, but it's not as likely. I want to find quality zones. So I continue to go back. And the nice thing about having this, I call it my guideline, that horizontal line going back, is I know I'm not going to accidentally mark an area that we've already been below. You know, I always keep it at the most recent low. So again, I'm going back. Well, here's an area that looks kind of interesting. We got some red, possible basing. We got a rally, lots of green there. And if it fits into my definition, I would mark it. It's actually this candle too. But the problem is I look back and I see, oh, wait a minute. this was a big imbalance as well. That's actually the origin of the demand. This is a retest, and that would have been the trade area. So I'm no longer going to use this. Why? Well, this was the origin of all the buying pressure. We removed a lot of those buy orders. Now there's probably not going to be enough left to hold up again. I always want to look for the fresh zones, the origins of the imbalance and the fresh zones. Go back. Not really great. And again, I just keep looking left and down until I find a quality zone. And if I don't find one, I move on. Or maybe this is going to be a really good short at some point, because as you can see, that's why I have my horizontal line, because I don't want to mark these by mistake. I need to find the origin of a fresh zone. Now you see, this is probably why we bounced where we did. We were going sideways and basing. This is a rally base rally right there. And it caused prices to bounce. But since it's already been used, again, I'm looking back further, and that's not going to fit the structure. Reason why? We've already been there a bunch of times too. And I just keep looking until I find what fits my definition. Or I can use my program to do it for me too. USD, that was a 4-hour time frame. Automation makes life so much better, doesn't it? And you can see it's not really marking any of these because, again, they didn't really fit the definition or whatever it was. And going back, I think that might have been the one that we hit earlier. Look at that. It worked. Didn't hold the second time. Why? We had already used up all the orders. Well, go to the next area. That's not great. I already mentioned that. Keep going down, finding the next area. And I don't have it there, so I'd have to pull up more data. So that's kind of what I do. Like I said, when it comes to finding zones, and I gave you hopefully a lot of good info. Thank you for saying that, Jennifer. There's lots of good info here. If you think that's good, just imagine what you could do with more. This was just a little over an hour of time with me. But like I said, with the E-mini Think Tank, if you're interested, you can email us, support@wealthbuildershq.com. I'm actually doing a workshop on Tuesday night as well, this coming Tuesday at 8 p.m. Eastern, if you're interested, where I'm going to kind of repeat a little bit about what I just talked about, but I'll also talk a little bit more about the E-mini Think Tank and how it works. There's a lot of education there where you can go ahead and watch it whenever you're ready, really. If you got your hand raised, Henry, you can just type in the question in the chat if you'd like. But anyway, there's bonus videos. There's, like I said, on-demand education anytime you want it. And there's documentation that goes with it to support all that. And we practice live in the markets on a regular basis. So hopefully you got some good information there. I'm going to go ahead and get some more work done. I'm busy today, got a lot of stuff going on. Thanks for being here. And hopefully I'll see you again soon. So until next time, trade safe, trade well. This one, oh yeah, to review, I think we repost most of these on our YouTube channel, if I'm not mistaken. So if you want to watch this again, I don't know when it will be up because I don't control that. But let me just check real quick before I let you go here. And search, let's see. Builders HQ. Oh, I had the wrong one there. There we are. So it brings back over. Yeah, in YouTube. There we go. Wealth Builders HQ. And you go to that page. Make sure you do the HQ because that's ours.
Hey folks, my name is Rob.
And that's Rob. And if you want to, you can go, I think the playlist is probably the easiest way to find them. And let's see. Trading Coaches Playbook. There it is. Or you could try to search for it as well with my name or whatever. But you can see there's a lot of different videos and they're updating them. We do these on a regular basis. So yeah, as you see, they're getting closer and closer 1 year ago and you keep going. So anyway, it wasn't updated recently, but I'll make sure this one gets posted as well. So that's probably where you'll find the recording. And like I said, if you join me on Monday, if you're interested, or let's see, go to members here. Oh, where is, let's see, do I have my email open? I can just give you guys a link right now if you want to join me on Monday. I'm sorry, Tuesday, not Monday. Tuesday, the 14th. Nope, that's the wrong one. What am I at? That's the wrong month. I am really messed up here. But anyway, if you want to join me on Tuesday, come on, all these pop-ups. Here it is. That's what I was looking for. At 8 p.m. Eastern, using this link. There it is in the chat. But yeah, now it's on May. It was in the wrong month. Why is it not showing here? Anyway, that's odd, but it's on the calendar. But it is I just clicked the link that I put in the chat there, and there it is. Putting futures in your present, May 16th, 8 p.m. You can go ahead and join me, and I will be discussing a lot of this as well and more. So yeah, if you wanted to watch the recording, like I said, it may take a little while, but they will post it on our YouTube channel for Wealth Builders HQ, and or you can join me on Tuesday as well. So again, thank you everybody for being here. I had to run, got a lot of stuff going on. If you got more questions, as I said, please email us at support@wealthbuildershq.com. That's the best way to get hold of us. There you go. And I'm going to figure out who's got that horn that will not stop honking and pull their battery. Anyway, you put that to host and panelists. You got to repost that, Alyssa. Anyway, yeah, support at wealthbuildershq.com in the chat. There we go. There we go. So there it is. All right. Thanks, everybody. I got to run. Take care.